Good morning. Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're coming to you from the Nasdaq MarketSite with April Rudin. She is the founder of the Rudin Group, and we're going to focus on how big tech may be your next wealth manager. Before we get into that, though, let's go over the latest global high net worth individual reading. That market is continuing to grow.
That market is huge. When you think about what is the next growth market, wealth is sexy and wealth is growing. It's unbelievable the amount of wealth that's coming into the marketplace, whether it comes from the wealth transfer that you've all read about, $42 trillion of wealth being transferring hands. There are entrepreneurs that are making huge amounts of money now, and the combination of both in the millennials, inheriting wealth and creating wealth themselves.
Who qualifies as a high net worth individual? How much money do you have to be considered one?
That's a great question, Jill. I mean, it varies based on different reports and different thresholds, especially different banks may have different thresholds themselves. In general, it's usually around $5 million investable assets. For ultra high net worth, $30 million investable assets. But it really varies.
Regionally, where are you seeing the most growth and where are the declines?
So according to the Capgemini World Wealth Report, and my firm is a contributor to the Capgemini World Wealth Report for the past 5 years, everywhere is growing. There are almost no declines. The fastest areas of growth are happening in Asia. No surprise, in case anyone's seen Crazy Rich Asians, you know that the amount of wealth is really crazy. And also in North America, is another really huge growth market, again, because of the transference of wealth and entrepreneurship that's happening.
As wealth managers continue to deliver strong returns, what is the key to overall satisfaction of the relationship? Is it still a person, people-to-people relationship?
So again, another great question. We're really, sort of at the tipping point here. Technology has really changed everything, and probably the last sector to change is financial services with technology, and that's something called fintech that you might hear about, thrown around a lot. And wealth management is probably the last part of financial services, sort of the oldest and most stayed. So yes, to answer your question, it's a relationship business, but technology more and more is coming into play.
What's hybrid advice?
Hybrid advice is the combination of using technology and using a human advisor. Again, I think we're at the sort of tipping point here where firms know that they need to offer human advisors, of course, because people really want to interact with people, but other people want technology. So it's a combination of many different entry points for all your clients rather than one single entry point.
So when we talk about transferring wealth management to technology firms, are you talking about like the Amazons, the Googles that are out there? Are people going to these big tech firms for wealth management now?
So that will be the expected trend. Right now, all of these firms are creating their own entrees into the business. There are some barriers to entry with regulatory and compliance, but there are also a lot of attributes that these firms have. The FANGs, as they're known as, which is Facebook, Apple, Netflix, and Google, really have the client base, they have the technology to be able to offer up solutions. Hybrid advice is a combination of these firms coming together and creating offerings. So I think that's what we can expect to see over the future.
That'll be interesting to play out. Like, hey, Alexa, how's my portfolio doing today, right?
Exactly. I mean, wouldn't that be good? Hey, Alexa, how's my portfolio doing? And I'd like to make a transfer and buy some stock. Or I'd like to find out what my portfolio is doing, or transfer cash or funds. You have more and more people today that are global and mobile, and having the ability to use voice and one platform is really increasing.
Fascinating. Even 10, 15 years ago, you couldn't do anything without a signature, without an actual phone call, with physical confirmation. So it's amazing to see how it's transitioning.
Exactly. And I think the other interesting thing for people to notice is it's really being led by high net worth. People have the, wrong notion that high net worth individuals are opposed to technology, only want face-to-face contact, and that really can't be further from the truth. Many, many studies, including Capgemini, bears out this, which is the appetite for digital has never been higher among high net worth, which makes the stakes really interesting for wealth management.
All right. Well, thank you so much for joining us as always. And thank you for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.
Thanks, Jill.